And hello, everyone. We are streaming live on Facebook on the Surpass Facebook page. And today we are with Lynell Bevels, a mortgage VP of mortgage lending with guaranteed rate. And we are going to be updating you on what's going on in the current market. So we're discussing the current market trends, and just want to thank you all for chiming in, for those that will be able to make the live call and those that will be watching this later today. If you have any questions about the current market, please go ahead and chime in and we'll go over those questions today. Lynell, how are you?
I'm fantastic. Benny, how are you? Happy Friday.
Definitely, definitely. We have beautiful weather. It is a
Yeah,
beautiful day. It's been productive and purposeful so thus far. You know,
fantastic.
yeah, business is going well. We were just talking about that just now, how well the market is going right now.
Yeah, it's a really robust market right now. For people who don't believe it, if you check the news, CNBC is talking about, how low the rates are. And I know we've been hearing for the past several months about these historically low rates, which is very relevant. But even I was shocked yesterday looking at a rate for a client. I happened upon a rate that was 2.25% for a 30-year fix, and I nearly fell off my chair.
Can you
I
say that
just
again?
thought
Can you say that again and slower? A what, please?
2.25. That's 2.25%,
Wow.
30-year fixed for an FHA product, which an FHA product, the Federal Housing Administration, is a product that a number of first-time homebuyers use. However, you do not have to be a first-time homebuyer to use the product. It's just a product to help people who are looking to kind of get in without having to come up with larger down payments. You can, get in with as little as 3.5% down payment. But the rate, it's just unbelievable. Pinch me. I've been in the
That is
business 30
phenomenal.
years. Yeah, I've never seen a rate that low, honestly. I've never seen a rate that low. I think that, for people who are on the fence, really get off the fence, call Bennie, call me, get yourself pre-approved, because Bennie won't talk to you unless you have a pre-approval, but
That's
call
not true.
me.
We'll have a conversation. Hold on, wait a minute.
He
this is
won't take
this
you
is a
out.
this is a relationship business. We could definitely have a talk about your goals. We could definitely have a talk about where you want to go and
That's
how we can
right.
get you there. And then
That's
I'll put
right.
you in contact with Lynell, so that
That's
way we're
right.
following the right steps to make it happen.
Follow the right steps is very important. One of the points you made earlier, Bennie, was that with the kind of the evolution of the market, requiring that you have a pre-approval before you even can take someone to even look at a property. So that's kind of the point that I was making. That it's just different, right? We don't
Right,
have open
right.
houses like we had before COVID, and it's all individual appointments. And so it's really more important that people are as organized and prepared as possible than in months prior. So
Right. And that's just to make sure that everybody is health conscious and because like I said, there's still people that are living in some of these homes.
true.
They're not all vacant. So now that we have laxed on some of the regulations, properties that have people living in them still are able to show them homes now. So this is just to make sure that everybody is staying safe and ensure that there's limited amount of traction into the properties, and just making it an opportunity for people that are ready to move forward with purchasing a home can
Sure.
actually still get it done. And the
Sure.
number and the
Absolutely.
numbers the numbers showing that it is still getting done. It is really busy right now for the limited amount of inventory that we have.
Yeah. Yeah. There's very limited inventory. It's been limited pretty much the entire year, but it's so much. It seems like it's more limited than it had been years past. But I know you have those stats regarding what the trends are
Hmm.
today versus last year. And as you pointed out earlier in our earlier conversation, that June numbers are off the hook. So
Yeah, yeah, yeah. And I'll get to the numbers. But I just want to go back to 2.25. Like Linnell said, I mean, if you've been on the fence, if you had been thinking about, making a move, if you've been thinking about refinancing, if you've been thinking about doing anything in the real estate market,
Yeah.
There is no better time than right now. There's opportunity in any situation.
Yeah.
Obviously, COVID is, I mean, it is a pandemic. It is, something that is not, looked at as a positive situation. However, there's a positive in the situation. There could be an opportunity for you to be in a better position as far as saving hundreds of dollars a month. It could be a situation for you to be in a bigger house, or downsizing a house, and you have much more comfortable payments than you are in right now. So I mean, you could possibly be living in the neighborhood that you've been wanting to move to for the last number of years. This is a great opportunity to either sell or buy right now.
No, totally. Because when you think about it, um, last year, I think I want to say 30-year fixed rates were more in the neighborhood of 3.75, 4%. So a two and a quarter rate makes a huge difference in terms of someone's ability to qualify. Um, it's really unbelievable, and really it just starts with just making a phone call to just see if there's an opportunity, right? Because it won't be an opportunity for everybody, but certainly there's plenty of folks that, today's rates are going to certainly help, whether it be, to purchase their first property, or a move up, or even a second home. As you and I were speaking earlier, second homes are also, a great opportunity right now, because with a lot of us sheltering in place and we're looking at these same four walls, you
Right,
can't
right,
go
right,
very many places. But if you own a second home, it's like, oh, well, I can go to my second home, right, on the weekends, and kind of feel like I'm getting away from the cave that we're, no matter how lovely your home is, being sheltering in place as often as we have, right? Um, different scenery
right,
is
right.
appreciated. Yeah. So
Yeah,
the
and
rates today are amazing. They are.
great,
And
great.
I want to say this. I was reading a piece from CNBC this morning, and they talk about how wonderful the rates are, but one of the things that's pointed out is that the market is really, really, really busy, from a lending perspective. So beyond COVID, before we got to COVID, we were already enjoying historically low rates. They just happen to be lower today, but we were already enjoying historically low rates. And with that, most lenders are inundated with refinance, requests. And what that means is that you're not going to enjoy a 30-day close. It is not likely that a refinance is going to close within 30 days. Now, you may be looking more at like a 60 to 90. It really depends on your specific set of circumstances, because some borrowers' files are a little more complex than others. And so that was kind of one of the points that was made in the article, is that we want to make sure to have the right expectation when it comes to how long the process may take. Now, when we're talking about purchase transactions, obviously, we have to accommodate contract close dates, which I don't know what's the typical these days. I've been seeing 30-day contracts. I know that some agents are a little more aggressive, but in this market, it's really difficult for lenders to even accommodate 21-day, just because their pipelines are so inundated.
Right, right. And I just try to make the process as stressful as possible. And having,
Stressless.
yeah, I'm sorry, yeah, I said stressful. Yeah, stressless, exactly. I'm
Stressless,
sorry.
yeah.
Stressless, yes. And so
Yes,
having that conversation up front, just to kind of educate your buyers about what's going on in the current market.
right.
That right there, it helps out with that stress that can be involved with the purchase process.
Absolutely.
So just letting them know what to expect. There have I haven't been seeing as many delays as it was initially with the onset of stay
Yeah.
in shelter and COVID-19. So 30 days is that's the norm. Um,
Okay.
I think sellers are comfortable with that as well,
Sure.
because those buyers, those sellers that are selling properties, they need to close on their other properties as well, or move to the other
Right.
home. So it just, and then a lot of the appraisers, the process of the appraisers, they've been backloaded because of refinancing as well as home purchases. So just
That is
making
true.
it a 30-day, it's just going to make it a lot easier for everybody involved.
Yeah, that is true. I was on a call yesterday with a local title company. They were giving some market updates, and one of their guests talked about kind of some of their pain points in the mortgage process. And one of the pain points is the whole notary situation, right? A lot of the in other parts of the country, digital notarization is available. However, in the state of California, digital notary is not an option. And so there was some commentary from some of the agents on the call saying, hey, California, get it together. And I wanted to chime in and say, it's not a lender thing, right? The lenders have no control over whether or not, digital signing, the notary portion, not all the other docs, but the notary portion. The state of California basically has not, allowed us to do that. But I'm sure that's going to be coming because almost all the other states, offer digital notary. So
Very nice.
There's evolution coming.
Now, with the lenders, you speak with, you work with notaries a lot. What's that business look like for them if you did, if we did go to digital? Is that kind of weeding out the notaries, or is it?
Well,
is it creating an opportunity for them to now not have to go out to the physical address and they could kind of supervise that process?
That's a really good point. That's a really good point. I'm not sure. That would be a good conversation to have with a local notary. I have a friend who's a notary, and she's been very, very busy because she goes out and they kind of do their separation to be able to sign, but she's they're all wearing masks. So she's extremely busy with the notary. But yeah, that's a good question. I'm not sure whether or not the digital notary is going to interfere with, the notary's business. It might.
Right. We'll table that then. That'll be a question for a notary. Yeah.
Sure.
Well, great. Well, let's segue back to what we were talking about earlier about, obviously June being a very busy month. July was as well. Obviously, those numbers aren't out as of yet.
Right.
So we do have some numbers from June. And this information was pulled from the California Association of Realtors website. So this information is pulled from 90 plus different multiple listing services from across the state.
Right.
So this is about as accurate as it gets. And the existing single family home totaled 339,910 in June.
Wow.
So that's based on seasonally adjusted annualized rate. So that's if the amount of properties that were sold in June was the average for the rest of the year.
Okay.
So that's what the number would look like: 339,910 throughout the state. So
is that national?
No, that's just California.
California. Okay.
Just California, up 42.4% from May 2020. So that's the biggest jump. That's the biggest month-to-month jump in the last 40 years. 40 plus years.
It's amazing.
Right. And as well as the price points are still going up. So that's why that's what speaks to what I was mentioning earlier, that it's a great opportunity for both buyers and sellers in this current market. One, buyers are being able to take advantage of the phenomenally low, historically low interest rates, and then sellers are still being able to sell their properties at and upwards of market value. So with that being said, the median home price has gone up. It actually went up 6.5%, and this is statewide. So in May, it went up 6.5%. It's currently 626,170. In the month of June, it went up again 2.5%. So
no surprise there.
right, exactly. So these are numbers like, and even compared to June of 2019, that went up 2.5%. It went up 6.5% in May of 2020. So it is a very active market.
Yeah, it makes sense. When you think about, not being able to, go and see friends and family as readily as we had been able to do. And you really do start to, kind of ponder your living arrangements, right? I think that, people have far more time, right, to kind of surf the net, to look at what's on the market and, dream about the ability to have a backyard or, larger rooms or whatever the case may be, and be I think the trend is, from my understanding, is more suburban opportunity, right?
Right.
Because if more folks are able to work from home, and that this is going to be a long-term opportunity, and it's certainly shaping up to look that way, then living in, an urban city is not necessarily the draw that it had been, right? So you have a
Right.
lot of the
Right.
tech, folks, a lot of tech employees who are, spending, four or $5,000 a month on rent for a studio. You
Right.
know what I mean? Just so that they can walk to work. And I think that's great, right? It's convenient,
Hmm.
but if you're not going to work anyway, you're
There's no
working from
commute.
your
Right.
desk, there's no
Right.
commute, then those opportunities are available. And I'd love to see, I shared this on another call, I'm for the buyer,
Hmm.
really. And I,
Hmm.
I promise you, I can't even remember how often we are in a seller's market in
Right.
the past 30 years. I can
Right.
count on one hand how many times over the course of 30 years there's been a buyer's market.
Yeah.
Um, which is unfortunate. I'm rooting for the buyers. I'd love to see it be a buyer's market, but unfortunately, we're not there yet.
Hmm.
And, sometimes you have to make decisions based on the information that is before you right now.
Exactly.
And, with rates being as low as they are, and sometimes people don't really understand the impact that this historical low rate, you know,
Hmm.
headline is. It's huge.
Very.
When I started in this business, Benny, interest rates were, let's say, between 6 and 9%, depending on what your credit circumstances were.
Hmm.
6 to 9%. Some people were paying higher, but on average, the client base that I had at that time, or the broker I was working for at that time, 6 to 9%. That is so high. And now
Right.
here we're talking about a rates at 3% or lower. So that means your payment is at least a third, if not more, less than it would have otherwise been, right? You
Right.
know, will the market ever go back to that? Let's hope not. Let's hope that all of what is going on is not going to inspire that. But what we do know is that today, if you're buying property or refinancing property, you may be good for many, many years to come, right? Because if you end up in a rate that's at 3% or 2.25%, when, I don't know when you'll want to refinance again.
If
You
they
know what I
continue
mean?
to drop, you still be able to take the opportunity in 6 months and
Well,
refinance again,
that's
right?
true.
Yeah.
That's true. People can certainly do that. I
And
just,
that's been kind of been the trend, right? The last, what, 7, 8 months has been consistently going down. I mean, there was a couple spikes here and there, but for the
there
most
were.
part, it's been consistently going down.
Well, and I think that a lot of people, so what is it? Mid-March, when the whole shelter in place went into play, you had a lot of people in process, right, in their refinance process. And what that looks like is typically you apply and you also lock your rate,
Right.
usually that day. You're not necessarily floating with the market. That's typically. Now, if you've already locked and the rates go down, you don't just get the lowest rate, right? There's some negotiation that needs to happen, right? And there may be a fee associated with that. Well, some people got caught up and they were like, well, wait a minute. I think the rates are going to start to drop. So I'm just going to wait, or I'm just going to cancel and start all over. So certainly you had people who had already started and then they decided to wait or cancel and reapply months later, because for some people, the rates are much lower than they were
Hmm.
in, say, January, February than they currently are today. Yeah,
Right. Right.
yeah,
Yeah.
yeah,
Extremely.
yeah, yeah.
2.25.
I'm still like, I posted it yesterday. I just couldn't believe it. I wanted to be able to go back to that day, like in a year, just to make sure that this was real. Yeah,
Right, right,
2.25.
and that's what we're gonna get to those numbers too, to show what the numbers look like versus now versus last year the same time. And then also you had mentioned that what the trends are, what the buying trends are, is you're seeing people that are moving from the urban areas, moving out to the suburbs,
Sure.
and obviously with the opportunity of working from home, people need more space, and then also
Right.
they're seeing, and you mentioned also that you're consistently seeing these same four walls,
Yeah.
and it tends to kind of come in on you. So
Yeah,
people
it
are feeling
closes
a little bit
in.
more confined, right? So
Yeah,
now they're
yeah.
looking for a bigger home, a bigger footprint, maybe more land. So yes,
Yeah.
the homes out in the suburbs are becoming a lot more desirable now because now you don't have to deal with the commute. You don't want to deal with the hustle and bustle of the city. So
Right.
you need an office, so you need a separate space from the family where you can still operate and still do work. And
Yeah.
that goes back to that family life, that work life integration. As you see
Sure.
my boss in the background
I
here,
see. I see.
right. So it's one of those things now that's the norm. That's becoming the norm.
Yeah.
So you're
Yeah.
going to create an environment to where you're comfortable, your family's comfortable, you're in a space to where you can still be productive,
Yeah.
and take care of your whatever your job profile is. So
Yeah.
I want to go to those numbers, and as I'm doing that, because I'm gonna share my screen. Um,
Okay.
where are you seeing? Are you seeing more as far as the lending world? Are you seeing um, kind of a 50-50 with refinances and home buyers, or where are you seeing most of your business coming from right now?
I think it's certainly more. There's more people in the market who refinance than there are people who buy.
Hmm.
Um, but you know, well, that could change right now because the rates are so low. That's just going to be what it is. The majority of what is happening in the market would be refinancing. You have people refinancing, you know, um, as a proactive measure, right?
Hmm.
Because there's certainly people who don't know what is going to happen down the road, right? And so they're taking advantage of the rates, pulling out cash maybe as a safety net in case the unexpected happens. You you can't, if you're laid off, there's not much you can do, when it comes to refinancing or applying for any loan, unless of course there's another party on the loan whose income is going to accommodate the ability to repay, because that's what we look at, is your ability to repay this mortgage along with all your other debt. But definitely refinance is the majority of the business that almost any of the loan officers in the market are experiencing right now.
Okay. Okay.
Yeah. Yeah.
Well, great. So I have some numbers here, some
Oh yeah.
statistics for the people that want to see the proof, right?
Yeah.
So this is Napa County. Um, so this is one of our offices is in Napa, and then we also have a main office in San Francisco. So
Right.
we service San Francisco up to Sacramento, actually. So we're definitely in tune with what's going on in the market in all those different areas that we do service.
Mm.
So being able to speak to the market trends and what's going on is going to be able to provide more value to our clients, either buyers or sellers. So what we're looking at here is Napa County from 0 to 750,000. So this is under
Hmm.
the conforming loan rate. Um, and this is June 2019 versus June 2020.
Well, let me say this: the 749 is not under the it's under the high balance. So we have
Right.
conforming loan rates, high balance, and jumbo. So it at a
For
purchase
this
price
particular
of
area, right?
749. Yes. Yeah.
Yes. Yep. And that differentiates between different counties. Um,
Correct.
so for Napa, which is one of the highest counties in California,
Right.
yeah,
That's a high balance area for
right,
sure.
right.
Yeah.
So the number of for sale in 2019 June was 116, and June 2020 it was 60. So definitely
Hmm.
a huge drop in the amount of
In
sales,
inventory. Oh,
and
okay.
that
This
but
is
that also
sales.
that speaks to the inventory, right? That speaks to
Mm-hmm.
the low amount of inventory available. Um,
Yeah.
Actually, what's sold we're looking at 44 versus 60.
Yeah.
Um, so and then pending, we actually had more pending, 74 versus
Yeah.
58. So that means the
And
month before there were quite a bit of properties that went into contract or went into contract. Actually, excuse me, went into contract in June that would be closing in July.
right. So that 74, the red line, that represents the number of pendings in the month of June, correct?
Correct. Correct. The
Okay.
pending is the amount that went into contract in June that'll be
Hmm.
closing in July.
Okay.
Yep.
Okay. I wonder how many of those were from prior months, because as you and I had experienced, we had transactions that were smack in the middle of COVID, um, and some of these transactions lingered for more than a 30-day, 45-day, 60-day close because planning departments were closed and appraisers weren't as available. So I'm curious, what that number really is. Is it longer escrows, or there's really no way to know that actually?
Yeah, you know what? That's definitely a case by case situation because as
Hmm.
you know, that some of our transactions went a little smoother than others, right?
Yeah.
Uh, so yeah, so there, it wasn't the same delays in each transaction.
Right.
So that I would think that would be speaking more to like the numbers were saying statewide. That
Okay.
it was a rebound, obviously of
Right.
transactions. So up 6.5% from May 2020.
Nice.
So I think those are what it's showing here is speaking to that. There's more people getting into contract, and
Sure.
with the 30-day close or longer, that they'll be closing higher in July. So we'll be able to define that a lot more when the July numbers come out.
Right, right. Yeah, I'm sure that these numbers will be really surprising for people, particularly those people who are not in the business, because, you would think that because of COVID that this activity would not be happening. But, as we previously, talked about, there are reasons why people are moving,
Mhm. Right.
or well, yeah, there are reasons why people are moving, and people have more time, right, to have these kinds of deep discussions with their with their family, because they're not commuting, right.
Hmm.
They don't necessarily have the same level of stress with their employment, so there's room, mental mind space, to have these really important conversations about whether or not someone should buy now or later. So
Right. Very true. Very
yeah.
true. These numbers are fairly close, and also speaks to the amount of low inventory and the very motivated buyers. The green line
Oh.
here is the sales price versus original listed price. So
Mm,
97%.
yeah.
That's really close, especially for a area that's in the outskirts of the Bay Area.
Right.
So that means that offers are coming in really close to asking to the
Yeah.
original listed price.
Sure.
And then these numbers, I mean, literally, we're one up from uh, June of 2019 as
Okay.
far as average days on market.
Wow. Wow. I mean,
And
that's great. That's great.
right, right, right. So it's moving. It's not taking that long. And again, these are price points that are under the $1 million mark. I
Right.
do have the luxury numbers up to 8
Yeah.
million, so that's a totally different market. Um,
Totally.
Days on the market are uh, almost double, and I'll get
Yeah.
to those numbers here shortly.
Hmm.
And so this is just the month of inventory. We're actually lower than we have been all year long. One
Yeah.
1.4 versus 1.9 the same time last year. And
Yeah.
it's dipped as low as 1.6 in October, but as far as now, this is the lowest amount of inventory that we've had in a year. So that
Wow.
that speaks to having a conversation, with our clients that are buying properties, that we have to be a little bit more strategic with getting
Hmm.
you into the home. So
Yeah.
that is one, getting clear on how frequently you can actually get out to see the properties, how fast you can move when they do
Hmm.
come on the market, making sure that all of your finances are taken care of, your loan is taken care of, your down payment until all that's ready to go, and then also just being competitive and strategic with your offer.
Yeah.
It's not We're not in a market to where you can lowball or come in drastically under. If you
Not
really
at
want the
all.
home, right, right. If you really want the home, you're really clear on what you want to do, you got to
Yeah.
put your best foot forward. And I always say,
Absolutely.
if you're in a situation where you really want this home, you know, there, to not have a regret, by losing out on a couple $1,000s.
Right.
Put your best foot forward. If you miss out, then it just wasn't meant to be, right? You don't have any
Right.
regrets. You gave all that
Right.
you would have gave.
Yeah, and I like to tell clients, and I don't think I have my calculator handy right now, but I like to tell them, the difference between $5,000 or $10,000. I would give them the numbers, like how much that's actually going to represent in your payment. Might be $20, might be $40. Are you willing to lose, you know, a property for 5 or 10,000? Now, there's certainly other situations where you may have to offer 20 and
couple
50,
a couple hundred thousand more, right?
100,000. Yeah,
Yeah,
it just
yeah, yeah.
depends on your market. And so,
Right,
but still it's all relative, right? Do you want to lose out on a property for an extra, 200 or $500 depending on your circumstances? And, when people are ready to buy, they do what they need to do, particularly if they can afford to, go um, higher. They do what they need to do, and the numbers the numbers don't lie. It's an extremely competitive market, and you just have to prepare yourself to compete. You cannot prepare for anything else other than competing to win. Period.
right.
Yeah.
And speaking about competing, that's a great segue because that's one of the things that one of the conversations I have with my sellers, the clients that are selling property, is you're competing with every other home on the market,
True.
near your price range. So right
Mhm.
here, this speaks to that. This is the luxury market, so 800,000 on up to 8 million, right?
Mhm. Mhm.
So this year is 218 properties, for
Wow.
sale. Only
Wow.
36 sold. So that right there is division of competition. That right there is speaking to how competitive you need to be when you're pricing your property.
Yeah.
Your pricing
Yeah.
has to be competitive with the current market.
Yeah.
And understanding the market is where the sales take place versus those homes that sit on the market.
Yeah.
And in this situation, pending 78. So again, that speaks to, properties going into contract in early in June, and it'll be closing in July. So very interesting, see what those numbers will look like in July because you see the trends is definitely ramping up.
Oh
Um,
yeah. I mean, it's much higher June 20 than June 2019, from 46% to 78%.
right, and
Is
even
that what
so
that
from
number is?
from April 2020, right? So
Oh
we're
yeah.
seeing we're seeing a trend going up,
Up.
right, as
Sure.
we're getting
Sure.
into the well, the traditionally busy time of the year. A lot of
Right.
economists are saying that our busy season will actually be a lot longer because of COVID.
Oh yeah,
It
for
would go
sure.
lead into possibly November, October, November.
Yeah, I
Um,
could see that. But
right,
this
right.
market right here, Benny, is a very niche market, right? Because
Yes,
you
yes.
certainly have fewer, borrowers who are able to buy at that price point,
Mhm.
and those buyers they don't move, as often as buyers at other price points for obvious reasons. You know what I mean? It's a whole lot of money on the table, so. Um, it makes sense that it may have a longer shelf cycle, right?
Right, right.
Because some of these properties you're talking about, 5,000 and 9,000 square feet, and it's a lot going on, right? What are the features and benefits, and is this going to accommodate I'm looking for? And I wonder if this particular market, if the virtual video tours are working for this type of borrower versus the other borrowers who are buying sight unseen. I mean, what's the percentage of folks who are buying sight unseen at these higher price points? I would be curious.
I would too. You know what?
Yeah.
It just speaks to the use of technology because
Yeah.
National Association of Realtors, they came out with a report a couple years ago.
Hmm.
At the time, it was over upwards of 87% of home buyers were going online and looking at properties before they even contact a realtor.
Right.
So the use of technology is has been there for the number of years. It's just now really in the forefront because of COVID.
Right.
So, and investors have always, purchased homes sight unseen for quite some
For
time,
sure.
especially
Yeah.
investors that have a system dialed in or investing out
Right.
of state.
Yeah.
Um,
They're just looking at
and
the numbers.
right, and
The
also,
ROI. Yeah.
and that's another competitive, strategic option too with home buyers that are looking at a much lower price point where it is a lot
Right.
more competition with other
Hmm.
buyers,
Right.
um, putting an offer in before they even see the property and doing
Right.
their due diligence after their offer is accepted
Yeah.
because
Yeah.
the contract you're protecting the contract. So
Right.
if it's not going to work out for you, you could back out and get your deposit back. However,
Exactly.
if you get your offer in, you're at the table now.
Yeah.
So that's another option, especially for buyers that don't have the opportunity to get out as fast and to see as many homes as they would like to. Um,
Right.
so that
Yeah.
also speaks to homes showing very well online. They have to look well on the phone. You
Oh
know,
yeah,
that's because that's what you're in competition with. If your home has to show that value on a cell phone
for
versus
sure.
everything else that's out there.
Right, because
So,
that's what people are doing.
right.
They're looking at property online, and those virtual tours are also really compelling.
Mhm.
Um,
The
so yeah,
Mataports, where you're doing the self-guided tours, um,
exactly.
those, I mean, that at this price point, and those essential. That's essential. That
Yeah,
it
you
has
gotta
to.
have it.
Yeah, you have to have the videos. You have to have the Matterport. You have to do the virtual. Now we're doing virtual open homes. So
Right,
that's having a segmented time open, and you market that home. Then you market that time. Like for instance, you do Facebook Live, and you
right,
say that you're going to be video showcasing this home between 12 and 1 p.m.
right,
Call in with any of your questions. Chime and DM me, message me with any of your questions if you want to see a
hmm
particular part of the property. We're going to walk you through the home.
right,
So and then you have the listing agent right there that you could ask questions with.
right. I've seen that, and that's a really smart approach because I mean, you have to meet people where they are. Your buyers are online
Hmm. Hmm.
because we can't go out and play right
Right,
now. Yeah,
right.
yeah,
Yeah, exactly. So this is average days on market versus sales price to original list price. So you see,
yeah.
it's a bigger drop in the luxury market.
Oh
Uh,
yeah.
you're at 89% sale
To
price to original loan price. Excuse me,
yeah,
original listed price.
right, right.
Average days on market is at 80, and it's very close to what it was in June 2019. I
Mm,
mean, literally just a couple days difference. 76
yeah,
versus 80. We were at 90% versus 89%.
89%. Yeah,
Right, right.
yeah,
And obviously, people purchasing homes at that price point, they're not as affected by COVID as much as the labor force is,
right.
people that at this price point, they're exec CEOs, they're in professional careers, so they're able to work from home and still
Yeah,
get the same income.
right. Exactly. That is a fact. There's so
Hmm.
many people, even people who are not buying at that, those higher price points, who are in situations where they're not being, impacted, necessarily by COVID. It's more, as one of my friends says, it's more of an inconvenience,
Hmm.
right? Because their business is still going. Some folks are even thriving, in post COVID. So there's plenty of opportunity and certainly plenty of buyers out there, right? Some of them are just sitting on the fence. But we do need more inventory, Benny. We really
Yes, yes,
do.
that I mean that is definitely what the market it needs. That's why the prices are consistently going up, right?
Yeah.
Because low demand and high, I mean low inventory and high
And
demand.
high demand. Yeah.
Right. So, and that's what's speaking to what's going on in Solano County. Solano County has been a very active county.
Yeah.
Number of for sales,
Mm-hmm.
288. Well, for sale, 288. 394 sold. So
Oh wow.
that's the 288
Look
is
at
new
that.
homes that came in June.
Right.
These are the number of sales are obviously properties that were on the
Closed.
market.
Right.
Right, right. So and then pended 487. So definitely seeing a trend going up,
Wow. That's a
right?
lot. I mean, that's a lot of properties in Solano County. Wow.
Yeah, yeah,
That's a
yeah.
lot. Yeah.
So just having the conversation, and this has been the consensus over the other counties as well. So I don't want to bore everybody
Sure.
with these numbers. If you want to get more specific about your neighborhood, if you want to get some more specific about an area that you are interested in buying, please give me a call. We have an app that will give you all that information right on your cell phone. You just plug in the
Mm-hmm.
neighborhood that you're interested in, and it'll give you these statistics. It'll also give you information about the neighborhood, school ratings, um, of, nice restaurants to go to in the area. So contact us. We can get you set up with that free app. Give us a call, and like I said, we can go dive in and get more specific about the areas that you are interested in moving, and just know that this is a really competitive market.
Mm-hmm.
One based on the huge demand of people still wanting to move and the limited amount of properties available.
Mm-hmm.
However, we can still make it happen for you.
Yeah, I mean, you just have to be, as I said earlier, you just have to be ready and know that you're going to have to compete. I'm just going to put my information in the chat, just my
Definitely.
email and my cell phone. But um, yeah, people just have to be ready to compete. I have a client right now who is looking, and they didn't necessarily have to compete as much as, say, because they're not buying in the Bay Area, they're buying more out in the San Joaquin area.
Hmm.
And, those areas are still competitive, just not as competitive as, as Bay Area. But, nevertheless, it's limited inventory, right? And so where there is limited inventory, there is some competition.
Right, right.
Yeah, yeah,
Yeah.
yeah.
Yeah, and we're seeing that San Joaquin County is actually really active as well. I have some referral partners out there in that
Mhm,
area,
mhm,
and a client that I referred to that area, and so
mhm.
it's also very competitive. And it's same scenario, limited
Yeah,
inventory and just another high demand area.
yeah. Well, and I think it comes down to the affordability, right? Because,
Right.
you think about San Joaquin County, Stanislaus County, even Solano, not excluding Napa, of course.
Well, Napa's Napa
Napa's,
County. Napa,
well, okay,
yeah,
right,
yeah,
okay,
yeah,
there you go. Okay, so
yeah.
Solano County, right? Um, they do offer, a good, affordability factor. That
Oh,
is something
definitely.
that you can't deny. And and it's lovely. The weather is fantastic. It's all open and beautiful yards, and just it's just a spacious place. And I think that more people are going to be open to counties like
Hmm.
Solano, because you're right there by Napa, right? And
Yeah.
Solano, what I found out, because I have a client who just bought there and closed in April, she's literally 10 minutes from several wine tasting rooms, right? So you don't have to go all the way to Napa. You could
No,
just
you
you
don't.
could be
Yeah.
in she's in Fairfield,
Right.
and there's several wine tasting rooms. As a matter of fact, my boyfriend and I, we actually joined we joined a winery a couple of like a in June.
Very
Uh,
nice.
yeah, I mean, because we like to go to Napa, but it's always nice to not go that far, and it's
Right.
quaint, and it just kind of gave me a new perspective of Fairfield. I hadn't really spent much time out there, but it's beautiful, and so lately I have been sharing with clients like, hey, I know you want to buy in Oakland. Everybody wants to buy in Oakland, and there's nothing wrong with buying in Oakland. But if you cannot compete, then you're going to have to broaden your horizons, right? You're
Right.
going to have
Right.
to look at other opportunities. And what I tell buyers is this: don't don't be closed-minded.
Mhm.
Be open. At least go look, because everything is online anyway. At least look at what opportunities are available for you, because we can't say, oh, well, there's nothing there for me. No, there's plenty there for you within the confines of our limited inventory, right?
Mhm.
It's just
Mhm.
that you may have to move further out, and with this ability to work from home, it's not as bad of a deal as it used to be, right? Because
Right.
now you're not going to be on the freeway 2 hours or 3 hours a day commuting. You're going to
Very
be
true.
at home, like me, sitting in front of this computer.
Doing these Zoom calls.
Zoom calls, right?
Right, right. Yeah, and your money goes a lot further, out
Oh,
here in these
wow.
areas. In Solano
So
County,
much.
it's a beautiful, like you mentioned, it's a beautiful area.
Yeah.
Vallejo is in Solano
It's
County. It's
beautiful.
one of the, most desirable cities now as far as investors and people moving to, because you could get a
Yeah.
property, you can still purchase a property under 500,000,
Oh,
and
yeah.
you could be 45 minutes away from San Francisco on a ferry
Oh,
ride,
yeah. Yeah, yeah. And
and not
and
have
you've
to deal
got
with the
some square
traffic.
foot. You've got like more than a 1,300 square foot home.
Right. And
Yeah.
the weather is phenomenal in Vallejo. You don't have to deal with
Yeah.
the heat,
Yeah.
the water, the bay right there, it keeps it, keeps the climate, pretty neutral. So,
Yeah.
the winters aren't extreme and the summers aren't extreme.
Yeah.
Very, very nice area. And it's on the up and coming, you know.
Yeah, no, totally. I think it's great. I'm for the buyers. Like I said earlier, I wish that we would, move closer to a buyer's market. I know that we're far from that, Benny.
Right, right. Well, it's
But
it's it's a win-win market. I would say that because
okay,
like we mentioned earlier, the interest rates you can't beat that, right? You
that's
just have
true.
to be a little bit more flexible with the inventory and
That's true.
actually and what that does is it speaks to being clear on exactly what you want. You
That's
know,
true.
dial in exactly what your must-haves are, what your needs are,
Right.
and and be patient. If
Yeah.
you don't see it out on your first couple of visits, don't get frustrated with the agent you're working with. It might not be the agent. It's just it's just the
It's
limited amount of
the
inventory,
inventory.
right?
This is what
So
we're working with.
right.
Yeah,
So
for
be
sure.
patient and educate yourself about the current market that you're in. And like I said, it's one of those situations where it's a win-win for the sellers as well as buyers.
Yeah, and keep saving. I'll tell you a story.
Definitely.
So, um, when you're looking to buy, until you're in contract, you should still continue to plan, right? You should still continue to save your money. You should still continue to pay your bills on time. You should do all of those things. And what you don't want to do is be in contract prematurely. And what I mean by that is, if you are working on things within your credit, right?
Mhm.
Those things need to be resolved, quite frankly, before you actually get in contract. You
Right.
may you may you know resolve them, during your pre-approval process, right? You've applied for a pre-approval, your loan officer is reviewing your credit, and there's a few things here, what's going on. And before you get in contract, you need to take care of those things. If you don't take care of those things, it's going to, you know, make your transaction a little murky, right?
Right.
Because,
Right.
and I'll give you a really good example is that some people don't know is that when you have an account that you are disputing with the credit bureau or the account holder, what happens is your credit report reflects that the account is in dispute and it is not then calculated into your overall credit scores,
Hmm.
right? So let's say you have a collection that you've been disputing. That collection, which usually has an adverse impact on your scores, uh, is taken out, and so your scores might be a little higher than they would otherwise be. But the lenders are going to make you take it out of dispute, resolve it, and then rerun the credit score. So if your credit score drops as a result of that, there's a problem. So I just want to encourage everyone, and it's not, it's a whole lot of people. A whole lot of people dispute, accounts. It's not about, where your price points are. Plenty of people dispute. Just know what it means when you dispute. And I posted something from the CFPB, the Consumer Finance Protection Bureau, because they have some really good information about how to dispute properly and how to get that information taken care of. So I just thought I'd share that.
No, definitely. That was a boulder right there. That is a huge share.
Yeah,
Because like it's been a number of clients that I've worked with who have got themselves in trouble behind, reaching out to the creditors while they're in
yeah,
escrow,
yeah,
and that affecting their current credit score, and
yeah.
now their rates have gone up, or they can't even
They
close
can't
their
even.
close their deal.
Yeah,
So yeah, so being knowledgeable about the whole process, and it's not just the purchase of the home, it's everything around that. But you're being
totally.
knowledgeable about your finances, and
Yeah.
that's one of the missions that my other partnership, global empowerment team. That's one of you know the things that we speak to all the time is educating yourself
Yeah.
about building generational wealth, and what that
Hmm.
is being aware of your finances and how to,
Right.
because if you're not aware of your current status, you can't get any better, right? If you can't
Right.
measure where you are now, then how do you
Go
better yourself,
forward.
right? So
Yeah.
yeah, so
Yeah.
just being aware of your current status, being aware of the different options that
Hmm.
are out there for you to utilize, and understanding that real estate is a tool. Real estate can be that dream of home ownership, or
Hmm.
it could be a tool utilized to create generational wealth and to
Right.
put yourself and your family in a better situation, and leave that legacy, for your family, or put,
Absolutely.
or establish your retirement, your retirement plan.
Yeah.
So, real estate could be used for a number of different things. I know one thing is that, everybody that is rich, everybody that has wealth, has real estate.
That is a fact.
You know, they invest in real estate. So
Yeah.
understanding that is an essential part of creating generational wealth.
Yeah.
And it
That's a
is a
fact.
great opportunity if you haven't got into home ownership. This is a great opportunity to start now.
Yeah. I have a client right now looking who reaped the benefits of that. A family member passed and left them, monies, from the sale of their property. And that's why it's so important that as many people who can and want to buy should do that, right? Because you could, like you said, Benny, you could leave a legacy for your family, your kids, your nieces, your nephews, whatever the case may be. You never know. So I'm sure they were quite pleased to get, this lump sum, like just out of the blue,
Right, right.
you just never know. So yeah, but the market is hot, Benny. It's hot. Let's do some more deals. Yeah, let's get some of
Yes.
these buyers. Let's get some of these folks refinanced before things change. I'm available. I'm available for questions. I'm available for calls. I'm available for emails. Um, because I recently made a transition, I am not as busy as maybe some of the other lenders. So I can take a call. I've had people say, wow, you pick up your phone. Wow, you return a phone call. Wow. Well, yeah, I mean, even when I'm
That's
really
your
busy,
system. That's your system. You do that anyways, whether you're
I do
busy or
it.
not.
It doesn't
Yeah.
matter. It doesn't matter. So I'm available.
Right, right. So
Yeah.
again, Lynell, thank you so much.
Yes.
We'll continue to have these market trend updates to educate our audience and educate you on the home buying process and what the current market is, and how you get take an opportunity to make it an opportunity for yourself. So please, if you have
Don't forget
any
about the
questions,
rates.
right,
Those low
exactly,
rates.
2.25. What are you waiting for, right?
What?
We need more people to help. We need
Yeah.
more people to help. So reach out to Lynell. She
Yeah.
provided her information.
Yeah.
www.bevels@rate.com.
Yeah.
Telephone number 510-919-0281. Um,
Facebook, LinkedIn, I'm all over it. Twitter.
right. Reach out to us
My
at
name.
Surpass. Our contact number is 510-689-1138. You can email us at info@surpassconsulting.co. If you want to check our website, you want to look at some properties, you can do that at Bay Area Luxury Homes, the number 4 sale.com.
Yeah.
Contact us with any questions that you have, and hope you have a very productive and purposeful day. Thank you all for chiming in, and take care.
Take care. Thanks a lot, Benny. This was great.
Thank you, Lynell.
Yeah.
Talk to you soon.
Take care.